VC marks are bullshit. Like everybody knows it. Nobody's really talking about it. Everybody's like, oh yeah, the other VC funds marks are bullshit, but mine are great.
Okay. Well, now we've opened up the can of worms. Just on a tactical basis, Tomas, I'm curious if your first fund is getting to the point where you have to deal with this issue and if you have any strategies, and then I'll talk about some of my own.
No, I mean, not yet. So fund one is only about 2.5 years old. And I think for fundraising,
you got plenty of time.
Yeah, I mean, Grady will have a view here, but I think you really need to show DPI by fund three, ideally fund three, but definitely by fund four. And so there you're talking about the fund being 6.5, 7 years old, something like that. And there I think it'll be really important to show DPI. And so secondaries might be an important part. And I think there's one component of secondaries, which is there are third-party secondary buyers, and then there are new investors, bigger investors who raise very large funds who could also be potential buyers of secondary.
I think a lot of this has to do with the fact that the wrath of Lina Khan put a 4-year freeze on what I'll call single and double M&A, $50 million to $500 million acquisitions.
Don't blame it all on Lina Khan. This is like
100%
ZERP era excess by VCs, not the government.
No, but I'm just talking about the M&A piece. Like we used to see a lot more.
Good companies will get bought if they're worth getting bought. It's because all these companies a lot of companies are bullshit that they're not getting bought, or the prices.
I disagree. I think a lot of it had to do with that 4-year period of people saying, watching Figma, watching other,
you're talking about really high end. Yeah.
Well,
sure.
no. I mean, even
stuff.
the little ones where it's like, remember Zuck tried to buy like, was it a GIF company? I believe it was like a GIF or like a meme company.
Giphy.
The Giphy. Yeah. And then they were like giving him a hard time about that. And then Amazon tried to buy a small robotics company. Again, super hard time about that. I'll ask producer Claude to give me some of those that got stopped or got iced.
Aren't M&A transactions up?
Well, now, since the wrath of Lina Khan ended, January 20th.
Oh, come on. They were up before the transition in government.
Not really,
been up for the last year or so.
They were really, I mean,
Show me some charts, Jason.
Okay, we will.
Show me some charts.
Well, here's one. Startups are buying startups. This is a really interesting, M&A has come back. IPOs have come back. And it's exactly correlated with the change in administration, putting aside, Democratic versus Republican. This administration wants to see more transactions. This chart is interesting. It's from our friends at Silicon Valley Bank. Startups are buying more startups, VC-backed M&A deals, and a percentage with a VC-backed buyer. So here we go. Percentage with a VC-backed buyer, 46%. Total deals, full year extrapolation. So I think this is going to be... whether this is consolidation of and a way to kind of wrap up old funds, which is have one startup buy another, I do think this is starting to come back. What do you think?
Isn't that just a function of more companies not going public? Like same buyer, but that company would have been public 5 years ago. It's private today.
Maybe, but I mean, maybe they're just smaller is, I think, sort of my take on it. They just, unless you have
a real... a startup?
No. Stripe is, that's a public company that's decided to not go public.
Right.
Yeah.
So their transactions are probably counted as a private VC-backed company, but that's essentially a public company.
So let's talk about the impact then of all these IPOs. We're starting to see them. Have you had anybody on that path, Tomas? I'm curious. On the IPO path, or in your two funds yet? Do you have any you're sort of excited about that possibility with, or are you still too early?
No, we have a few that are definitely on that trajectory. I mean, it's still early, and to go public, you probably need $400 million in trailing, or something of that order. So, but I do think
that's amazing. That's the number. That's just amazing.
Well, so there's two different dynamics. The first is Anderson published a study. Okay, so if you raise a round of private capital, legal costs, whatever, 100K to 500K to raise that round of capital. If you go public as a result of all the regulatory challenges of 15 to 25 million. And so you can't spend, if you're 100 million in trailing company, in trailing revenue, you can't spend 15 to 25% of your revenue to close a financing. So that's a big challenge. And then the other challenge is that the large asset managers, I think it was Co2 who had this in their East Meets West 18 months ago. the large asset managers need to deploy pretty significant check sizes at IPO. And so if you're 100 million in trailing, maybe you're worth $1 billion. Sure, maybe you float 20% to $200 million offering. You can't really put that amount of money, big amount of money into that IPO. And so the juice isn't worth the squeeze.
$1 billion is not enough to go public. $1 billion market cap, not enough to go public.
Not anymore. I don't think.
You know, the number I hear is just you have to be at $1 billion in revenue, growing 20, 30% year over year is the new bogey. So
that's what I heard too. I don't know if that's true, but $500 million to $1 billion is kind of what I've been hearing.
If you want your business to succeed online, it has to stand out. And that's why you need a beautiful, world-class website. The good news is you don't have to hire an expensive designer anymore, nor do you need a bunch of developers. No, Squarespace has all the tools you need to claim your domain and start building your company. Hey, maybe you got a product to sell. Maybe you want to show off some samples of your work. Maybe you've got a new service you're providing. Well, Squarespace is the all-in-one tool you need for your business to grow and flourish. And they offer beautiful templates. Maybe you want to start an online course or you're scheduling appointments for people. Maybe you're generating client invoices. All of that is built into the product. Everything you create with Squarespace is pre-optimized to show up in search engines as well. So you don't need to hire some expensive SEO person. Nope. They're building your meta descriptions. They're setting you up with an auto-generated sitemap, and the SEO is done before you even get started. Plus, there's a new AI-powered feature. It's called Blueprint, which makes it easier than ever before to customize your website and make it really pop. So check out squarespace.com/twist for a free trial, and when you're ready to launch, go to squarespace.com/twist to get 10% off your first website or domain purchase. That's squarespace.com/twist.